Right friends, welcome back to Banking Awareness. This is module 6. We are going to discuss in this class accounts for NRIs. What are the types of accounts for non-resident Indians? What is meant by LIBOR? What is meant by DTAA? What do you understand by POS terminals? What is IFSC? What is NEFT and what is RTGS? These things we are going to discuss in this class. So let us look at the first one before going into these items. Banks classify various regions. One is they classify it into tier 1 to tier 6 based on the population. Tier 1 to tier 6 based on the population. If the population of a town or city is 1 lakh or above, they are classified as tier 1, because several times we use this tier 1, tier 2, tier 3. Or sometimes we call metropolitan center, urban center, rural center, semi-urban center. So you should have clear idea about what is the classification of these banks, right? Tier 1 means 1 lakh and above. If a bank is established in a town where the population is 1 lakh or more, that is classified as a tier 1 center in banking parlance. Tier 2 is 50,000 to 99,999. Tier 3 is 20,000 to 49,999. Tier 4 is 10,000 to 19,999. Tier 5 is 5,000 to 9,999 and Tier 6 is less than 5,000. So this is the classification basically to ensure banking services in rural areas. This classification is made, right? Second thing is, banks classify into 4 categories when you look at the rural, urban or semi-urban or metropolitan is concerned. Any town or city equal to or greater than 10 lakh population, any town or city equal to or greater than 10 lakh population are classified under metropolitan centers. Metropolitan centers are the towns or cities where the population is over 10 lakhs. If you take Madurai, if you take Agra, these centers comes under metropolitan centers in the banking parlance. Urban centers, population between 1 lakh to less than 10 lakhs, they are urban centers. Several small towns comes under urban centers. And semi-urban is 10,000 to less than 1 lakh. 10,000 to less than 1 lakh. That is semi-urban centers. If the population is up to 9,999, they are classified as rural centers. To put it in other words, Tier 5 and Tier 6 constitutes rural centers. Tier 5 and Tier 6 constitutes rural centers. Tier 2, Tier 3, Tier 4 constitutes semi-urban centers, and Tier 1 centers can be urban or metropolitan, right? This is the broad classification as far as the banking services are concerned, because before opening a bank branch, bank look at it from the perspective of whether it is urban center or rural center, because they have to follow certain norms as far as opening of bank branches is concerned in rural areas, right? Please don't forget this. And having learned this, let us look at the accounts for non-resident Indians. You may ask, what is non-resident Indian? Non-resident Indian is an Indian citizen. He is an Indian citizen having a valid Indian passport but temporarily staying in other countries. It is a normal thing for some of our Indians to go to United States of America in search of job. Still they retain Indian passport. They are non-resident Indians. Or put it in other words, if a citizen retaining Indian passport but staying in other countries at least for more than 6 months in a year, they are classified as non-resident Indians. Please don't forget. I am just telling as a broad example. There are several conditions, several restrictions. I am not going into those details. And as a layman, please understand that an ordinary Indian having Indian passport but staying abroad for at least 6 months in a year are classified as NRI, right? So, NRIs, what are the types of accounts? I will take one example. Suppose let us assume Rakesh and Somesh. Rakesh and Somesh are two brothers from Meerut district of Uttar Pradesh. Rakesh and Somesh. These two are brothers from Meerut district of Uttar Pradesh. Rakesh is well educated. Rakesh is well educated and Somesh is doing agriculture. Rakesh is well educated, Somesh is doing agriculture, and these two brothers have lot of properties in and around Meerut, including agricultural lands. They have some fixed property like buildings in Meerut as well as some agricultural lands around Meerut in Uttar Pradesh. Right? So, let us assume Rakesh, as he is well educated, migrated to United States of America. Rakesh migrated to United States of America in search of employment and he is staying in United States of America. He is NRI. Rakesh is in America, Somesh is in India in Meerut city of Uttar Pradesh. Now, let us see what type of accounts can be opened by Rakesh. What type of accounts can be opened by Rakesh, right? First and foremost is NRO account. This NRO account, non-resident ordinary rupee account. This account can be opened by Rakesh. He is staying in United States of America, but he has lot many properties around Meerut. He has buildings, he has sugarcane agricultural lands, and there will be income from India. Though Rakesh is staying in America, he may have income in India because of fixed properties, because of urban properties, because of agricultural properties. For the income earned in India, he has to deposit in NRO account only. Non-resident ordinary rupee account is to be opened by him. It is to be opened in the authorized branches nominated by Reserve Bank of India. They are called authorized dealer branches. These NRO accounts can be opened in post offices also, and these NRO accounts will be maintained in Indian rupees only. They are for income earned in India. Income earned by Rakesh in India is to be deposited in NRO account only. As it is income earned in India, he has to pay income tax in India. He has to pay income tax in India, and if Rakesh wants to take this money back to America, it is not possible. He can take only up to a maximum of $1 million in a year, because it is the income earned in this country. He cannot take total amount. He can take maximum of $1 million per annum, and he can open joint account with his brother Somesh. Rakesh can open joint account with his brother Somesh, that is NRO account. So, these are the features of NRO account. Let us come to the situation. Rakesh is earning income in America also. Rakesh is earning income in America also. So, for the income earned in America, he has to open NRE account. Non-resident Indian Rakesh can open NRE account with a bank in India. So, NRE account is the account maintained in rupees, and it is for the income earned abroad. For income earned in India, it is NRO account. For the income earned abroad, it is NRE account. Both are maintained in rupees. I have told you, Rakesh can open joint account with Somesh when it comes to NRO account, but he can open an account with Somesh, that is NRE account, with some restrictions, and Somesh will operate that account as power of attorney holder only. That means for NRE account, his brother can operate that account as an agent of Rakesh only. Right? And it will be maintained in rupees. That is first thing. It is for the income earned in America or abroad. India has got no power to tax it. India cannot tax that income, and as and when he want, he can take entire money back. As and when he want, he can take entire money back, and this account is maintained in rupee terms. I have given all other stipulations here. Important point of NRO account is Rakesh can open joint account with Somesh as far as NRO account is concerned. But when it comes to NRE account, he can open account with his brother Somesh, but Somesh will operate the account as an agent only, that is called power of attorney holder, right? And NRO accounts, he cannot take more than $1 million per annum to America, but NRE account, as the income is earned in the foreign land, as and when he want, he can take entire money back. Other things I have given here, and this NRO and NRE accounts can be opened either as a savings account, current account, recurring deposit account, fixed deposit account. They are maintained, both these accounts are maintained in Indian rupees, and at the same time for both these accounts, interest given by Indian banks normally should not be more than domestic deposits. The interests given by the banks for these deposits normally should not be more than domestic deposits, but sometimes RBI may give some exceptions for NRE deposits. Right? This is all about NRO and NRE deposits. Look at other type of deposits, FCNR deposits. FCNR is foreign currency non-resident account deposits. These are maintained in approved foreign currencies, not in Indian rupees. They are maintained in approved foreign currencies. If Rakesh wants to maintain account in United States dollar, he has to open FCNR account. And this is for fixed deposits only. The tenure is 1 year to 5 years. And just like NRE account, he has to open account with his brother Somesh, but Somesh will act as his agent only in the capacity of power of attorney holder. Right? And here FCNRB account can be opened in approved currencies. Minimum period is 1 year, maximum period is 5 years. It is fixed deposit account, please don't forget. And here the interest rates are regulated by Reserve Bank of India. Interest rates for FCNR accounts regulated by Reserve Bank of India, and they regulate based upon LIBOR. Based upon LIBOR, these interest rates will vary. You will come to know what exactly is LIBOR in a few seconds. Right? So we have discussed so far these three types of accounts: NRO, NRE and FCNR accounts. These are the accounts normally authorized for non-resident Indians, and I have given in the PPTs the various features or salient features of these three types of accounts. So Rakesh has got an option to open 3 accounts. One is NRO account, which can be opened jointly with Somesh, and that is for the income earned in India, taxable in India, and NRE account, which is operated as an agent by his brother, and their Indian government has got no say as far as tax is concerned. If Rakesh wants, he can take that money at any time to America. Similarly, FCNRB account, there is not much difference, except FCNRB accounts are operated in approved foreign currencies and FCNR account is only for fixed deposits. These two are the major differences when it comes to NRE accounts. Right? So I have given all the salient features of these 3 accounts. I hope you will understand if you go through these accounts, and I have skipped 2 types of accounts. I will discuss them at the appropriate time. 2 types of foreign currency accounts are export earners foreign currency account as well as resident foreign currency account or RFC account. These 2 types of accounts I will discuss at appropriate time, and for the time being, please don't forget, NRIs have got option to open 3 types of accounts: NRO account, NRE account and FCNR account. Right? Please look at LIBOR. LIBOR is London Interbank Offered Rate. I have already told you that the interest rates on FCNR deposits are maintained in various foreign currencies. Interest rates on FCNR deposits are regulated by Reserve Bank of India, and Reserve Bank of India will determine the rate of interest to these deposits based on LIBOR. LIBOR is London Interbank Offered Rate. LIBOR is the benchmark index rate for various foreign currencies, right? They will arrive at what is the benchmark rate for various foreign currencies depending on various transactions for various time periods across the world, and depending on the LIBOR, RBI fix the maximum limit of interest rates for FCNRB deposits. So please don't forget, LIBOR is London Interbank Offered Rate. It is the benchmark interest rate for various foreign currencies. This much is enough. Let us look at double taxation avoidance agreement. Double taxation avoidance agreement is agreement between two countries so as to prevent the taxation of income in both the countries. So as to prevent the taxation of income in both the countries, because when a person migrated to some foreign land, he may be earning some income there, he may be earning some income in his original country or the country from where he has migrated, and here, as per double taxation avoidance agreement, the income tax rates will be decided between both the countries. So, to avail the benefit under DTAA, the customer has to submit tax residency certificate. Once the customer submit tax residency certificate, then the income tax rates will be based on the agreed rates between both the countries under double taxation avoidance agreement. Right? This is about the DTAA. And look at point of sale terminals. Please look into this picture. This is point of sale terminal. You will see at several places. You are going to purchase something. You need not pay cash. You can give your credit card or smart card or your debit card. Then automatically the merchant will have access to your money. Instead of paying cash, you can pay through card. To facilitate card payment, this point of sale terminals are used. What is the advantage of establishing point of sale terminals to banks? Banks will get income from the merchant. If Shopper Stop has got this point of sale terminal, if Shopper Stop has got point of sale terminal established by ICICI Bank, ICICI Bank will get fee income from Shopper Stop. ICICI Bank will get fee income or non-interest income from Shopper Stop. It is good source of income for banks. So, many private sector banks, especially ICICI Bank, HDFC Bank, Axis Bank are ahead in this non-interest income by establishing several point of sale terminals across the country. In point of sale terminals, banks will get fee income, and the advantage of merchant, say Lifestyle or Shopper Stop or Inox, the advantage is instead of cash payment, payments can be made through cards. Once a person is making payments through cards, then bank will get some fee income, and to tap that income, private sector banks are ahead, whereas public sector banks except SBI, all other banks are behind and lagging in establishing point of sale terminals. Right? So, after learning about point of sale terminals, let us look at IFSC code. IFSC code is a must if you want to transfer money electronically from one branch to other branch. You can only transfer money when the branch is IFSC enabled. If the branch has IFSC code, then only you can transfer money. IFSC is Indian Financial System Code, right? First four are alpha characters. First four are alpha characters. If it is State Bank of India, it will be SBIN. If it is ICICI Bank, it is ICIC. If it is Andhra Bank, it will be ANDB, like that. Fifth will be 0. That is kept reserved for future purposes. Fifth will be 0. Last 6 digits indicate the branch. First 4 indicate the bank. ICICI Bank, ICIC. State Bank of India, SBIN, like that. Last 6 digits indicate the branch code. So, with this 11 alphanumeric code, you can identify any bank branch in the Indian financial system, that is IFSC code. So this is must when banks transfer money through RTGS or NEFT. These are electronic transfers, NEFT and RTGS. What is NEFT? National Electronic Fund Transfer, and RTGS is the real-time gross settlement. Let us look at NEFT, National Electronic Fund Transfer. As per the RBI circular, minimum is not mentioned, maximum is not mentioned, but normally up to rupees 2 lakhs, less than rupees 2 lakhs, funds transfer takes place by NEFT. NEFT is National Electronics Fund Transfer, National Electronic Funds Transfer. Here, funds are transferred from one branch to the other branch, or you can say from one account to the other account in electronic way, and these are normally considered as retail payments. RTGS is not retail payment. RTGS is for rupees 2 lakhs and above. RTGS is not retail, but NEFT transfers are considered as retail payments. What do you understand by retail payments? Retail payments are small value payments. If you are transferring money through NEFT, or if you are making some transaction through your debit card or credit card or smart card, these are all called retail payments. Similarly, NEFT payment is also a retail payment. Under NEFT, as per RBI circular, no minimum, no maximum is specified, and up to rupees 2 lakhs, it is transferred through NEFT, and under the NEFT system, these transfers takes place in bunches, that is once in an hour. If you are giving request at around 12:15 AM, if you are giving request to the bank at 12:15 AM, your transaction will take place normally at 1 o'clock. That means these transactions will take place by clubbing together various requests. That is called deferred net settlement. Right? That is called deferred net settlement, and it will go in bunches and not individually. Every hour these transactions take place, right? And to Nepal also, you can transfer at rupees 50,000 per each transaction. Rupees 50,000 per each transaction, you can send money to Nepal also. And other thing is, if you have bank account, there is no problem. But if you do not have bank account also, then you can also send maximum of rupees 50,000 per transaction. Under NEFT, if you do not have bank account, then also you can send up to a maximum of rupees 50,000. But the beneficiary must have bank account. If you are in Lucknow, you are sending 25,000 rupees to your friend in Delhi. Your friend must have bank account. You may or may not have bank account. But if you want to send rupees 1 lakh, you must have bank account. That means beneficiary, the person whoever is receiving money, must have bank account, but the person remitter who is sending money should have bank account if he want to send beyond 50,000 rupees. Here, when you are sending money, the remitter has to pay nominal amount as fee, but the person whoever is getting, the beneficiary, there is no transaction charge. Right? Transaction charge only for outward transactions, but for inward transactions, there will not be any transaction charge. Right? This is all about NEFT. And let us come to RTGS. RTGS is for high value transactions. When you want to send 2 lakhs or more, then banks will send it through RTGS. They do not come under retail payments. They are high value payments, and through RTGS, each and every transaction will be registered with Reserve Bank of India, and the transaction will take place on real time basis. It is case to case basis. We have learned in NEFT system, all will be clubbed and will be sent once in an hour. That is called deferred net settlement. But in RTGS, what will happen? The amount will be sent on case to case basis. If you are giving request at 12:25 AM, it will be sent immediately on case to case basis. It will not be clubbed. So RTGS is for high value transactions, and here the beneficiary need not pay any amount, and there will be charges for outward transactions, the remitter has to pay and the charges are not much. If the amount to be sent is rupees 2 lakh to 5 lakh, it is not exceeding rupees 30 per transaction. If the amount is more than rupees 5 lakhs, it should not exceed 55 rupees per transaction. These are the transaction charges as per RBI circular. Right friends? So, NEFT is for small value, RTGS is for high value transactions, and please don't forget NEFT comes under retail transactions. Right? So, we have learnt in detail about various types of foreign accounts, what is the LIBOR, what is the DTAA, what is meant by POS terminal, and what is NEFT and what is RTGS in this lecture, and please do join for 7th module. Have a nice day. Thank you.